So you want to buy a house, eh? You finally made that decision. Now's the time. So I'm just going to run through here how you can get yourself ready to buy a house. So I'm going to talk about getting mortgage ready. That's what we're talking about today. So your success depends on you being mortgage ready. So one of the first things you got to do is you've got to get your mortgage in line. So you want to get a pre-approval. So your success is definitely being mortgage ready. The process starts right here, right now. So the thing is, some people say that it's a very daunting task. They really don't know where to start. Well, it really isn't that difficult. It isn't really that hard once you get started. So your biggest thing is two things. One, have a great mortgage agent that you know and trust, and have a great realtor like me on your side. So I'm going to show you and give you a bit of a list here of what you need to get the ball started. So here you go. So first of all, people ask, so how much money do I need to buy a home? So first of all, if you're under $500,000, you need a minimum 5% down, and then you need typically 10% over 500 up to $1 million, and then you need 20% over 1 million. That's typical. That's your down payment. So, and your deposit for when you make an offer on a house can come out of that down payment. It's not extra. Some people get confused with that. So the next thing is you need money for closing costs. So you need typically you'll say 1 to 2% of the cost of the house set aside for closing costs, and that might seem a bit on the high side, but it's, you're looking at least a couple $1,000s just to retain your lawyer. You'll need things like prorated money for prorated property taxes, title insurance, mortgage registration, things like that. So that's all paid to your lawyer on closing. And when you speak to me, I'll run you through all that and make sure you know what your expenses will be. And the other thing you need to know is, or what you'll have to figure out is, where is your down payment coming from? Is it coming from your own pocket? Are you saving and building that down payment yourself? Or is it coming from another place? There are different options. It's not just always coming from your paycheck, from your pocket. There are other ways, but it needs to be documented. And we can talk about that if you contact me. So before you look at houses, it's very, very important that you get pre-approved for an amount for a mortgage before you start looking at houses. You don't want to go look at $1 million home and you can only get approved for 500,000. That is very disappointing, very disappointing. So you want to make sure you're pre-approved. So here is a bit of a step-by-step and the things that you need to know to be on your way. So number one, check your credit score. Make sure when you do your credit check that make sure there's no mistakes. It's your responsibility to check and make sure there's no mistakes, because sometimes it happens and you need time to correct those mistakes. So, maybe you paid off a car or a truck or something like that, and it wasn't unregistered as paid in full on your credit history. You want to make sure that's done, and that takes time. So make sure you get that done. And you can go places like Equifax and TransUnion. There's other ones like Credit Karma and stuff, but the two, Equifax and TransUnion, are the two big ones that most lenders will use. Step number two, you want to get a letter of employment from your boss. So wherever you're working, you want to get a letter stating that you are employed there, how long you've been employed, and the intentions that you're going to be, it's a long-term or full-time employment. You also want to get at least 2 pay stubs from your employer. So, and if you're self-employed, that's a whole different ballgame. You'll need things like income statement and statement of business expenses. Those are some of the things, but when you speak to your mortgage broker, they can tell you more of what you need. Step number 3 is you're going to need at least 2 years notice of assessment from CRA, the Canada Revenue Agency. So you want to make sure you have the last 2. And in there, it will state whether or not you owe back taxes, and it states your income. So you want to make sure you have that in line. Step number 4, you want to make sure you have at least 3 months bank statements ready for your mortgage broker, because they may ask for that. Not always, but they may, because they need to know how long that your down payment has been in there. Step number 5, you want to make sure you have your down payment ready to go. You need to also be ready to disclose where it come from. Because maybe, hey, listen, maybe maybe your mom and dad are giving you money for your down payment, or maybe your great 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 grandfather left you some money. So you need to disclose where that's come from. The lender wants to know, because they want to make sure that you're not borrowing that money in order to make the down payment. So you want to make sure that's ready to go. So that's your 5-step. And then here's the thing. So here's some do's and don'ts that are very, very important when it comes to getting ready for the mortgage. It's all about your habits. You want to make sure you have a budget and stick to it. So if you've got a budget for, say, entertainment for the month, make sure you stick to it and don't spend way over. You want to make sure you stick to that budget so that you get in the habit of spending just the money you need to, because once that mortgage payment comes, along with it comes property taxes, comes home insurance for the home, for liability and for fire and damage. You want to make sure you're in that payment habit. You want to make sure you do correct any mistakes on your credit history. Make sure you do that. Do pay all your bills on time, because if you don't pay your bills on time, that will reflect on your credit history. Do pay off credit cards. So if you have extra money, make sure you pay down any credit cards or pay them off if you can. Some don'ts. Don't make large purchases. So if you're getting ready to buy a home, don't buy a new vehicle. That's a bad idea, because that's going to affect your affordability. That will greatly decrease the amount that you can afford to make for a monthly payment for your mortgage. Don't get a loan or increase your credit cards. So if you have 1 or 2 credit cards, leave it at that. Don't go and get yourself a Leon's or a Brick credit card, because that will affect your credit score. Don't change jobs. So if you're thinking about changing a job, don't do that until long after, if at all, after you've purchased your home. Not after you got pre-approval for a mortgage, but after you've purchased your home. Because that will affect whether or not the banks will lend you the money. Also, don't spend your down payment. So if you think you want to go to Florida or Mexico or Bahamas or something for a winter vacation, don't. Save that money. That is for your home, not your vacation. Also, don't cancel any of your credit cards. So if you've had a credit card you've had for 10 years or 15 years or 5 years, whatever first credit card you got, make sure it's paid off, and make sure you use it, but do not cancel it, because that's your longest history of credit, and it shows whether or not you're responsible with credit. The banks want to know that. So make sure you do that. And then this is about you and your future. Having a great mortgage agent and a realtor on your team is a wise decision. So reach out today. Let's get the ball rolling. And it's not as difficult as you think. Some people think that getting ready to get a pre-approval for a mortgage is a very daunting task. It's not. Once you know what you need, it's pretty straightforward. And if you're good at paperwork and bookkeeping and budgeting, it'll be even easier for you. So by all means, reach out. And here's just a little fact for you before I go, is happy homeowners. In fact, according to a new poll, 93% of homeowners say owning a home makes them happier than renting did. They say they'd never go back. And that's from mortgagereports.com. So, and there's lots of stats out there saying that homeowners are typically happier because they're not throwing their money away. So when you're renting, you're never seeing that money back. But if you're purchasing a home, there's a really, really, really high chance you're going to get all your money back in the future. So anyways, in order to get that ball rolling, by all means, give us a shout, give us a call. I'm glad to help you. And in the meantime, I am Joseph Talbot, real estate broker in the beautiful Southern Georgian Bay area in Ontario. So feel free to leave some comments down there. Let me know your worst experience or best experience when it came to getting a mortgage. And we'll talk at you soon. So until next time, take care. Check out the rest of my videos. There's lots more educational and informational videos. Thanks again. Have yourself a great day. Until next time.